All right, thanks everyone for joining us. Welcome to today's CreditorWatch webinar. We're looking at our small business risk review for Q2 2018. And my PowerPoint has just crashed. Bear with me while I get that back up. Nice start to the webinar. Almost there, okay. All right, hopefully everyone can see that okay. Any other issues, or if you can't see that or hear me, please just write in the questions box or raise your hand within the control panel of GoToWebinar. So my name's Patrick Coughlin. I'm the MD at CreditorWatch. As most of you who have attended before would know, I regularly run these webinars. Today, we've also got our guest contributor, Lance Rubin, who is the CFO at Sequel CFO, and will be providing some good commentary around the stats that we're going to look at. And I'm also going to fire some questions at him as well. I've got him on mute for the time being. Just unmuting you, Lance, if you just want to say hello, so I know that you can hear me and everyone can hear you.
Hi everyone, thanks Patrick. Yeah, hi everyone, and welcome. Looking forward to it.
Thanks, mate. Alrighty, let's keep going. So a little bit about Lance. Lance demonstrates a strong passion for cash flow and financial modeling, has extensive experience across both financial and professional services industries. He's started his own financial modeling consultancy firm called Model Citizen, and this follows over 20 years of experience across a number of large corporates, including NAB, PwC, KPMG, and Investec. Lance is also the CFO for fintech lender Banjo, in addition to holding the position of Group CFO for Sequel. A couple of interesting facts which we like to get from people. He is a thrill seeker, so advanced scuba diver, that he's done dives in Egypt, South Africa, and Australia. And he's also a two-time world championship competitor for South Africa and Australia in Taekwondo. So a nice smiley face there, but is obviously quite a dangerous person if you crossed him the wrong way, no doubt. So before we get started,
I'll try to keep it friendly. Sorry.
We'll go on. Sorry, Lance, jump in there.
Oh, no, so I'm friendly by nature. Don't worry.
That's right. It's a deceiving smile, I bet. So a bit of Q&A. Sorry, a bit before we get started. As always, please use the question box within the control panel if you've got any questions that you do want to ask. Slides and webinar recording are generally sent out within 24 to 48 hours of the webinar concluding. So if you have to leave us for whatever reason, we will send out the recording and the slides for you. And for those that want to share this with other people within their organization or colleagues, friends, etc., feel free to do that as well. And we're probably looking at about a 30 to 40 minute session today for those of you planning out the rest of your day. So looking at the agenda, we're going to talk a little bit about CreditorWatch, the small business risk review, and how we put it together. We've got just two poll questions, one at the beginning, one at the end, and of course the results of the statistics that we have pulled from our various data sources, including court actions, looking at unincorporated entities, corporate insolvencies, and bankruptcy insights as well. We're going to get a little bit of information and commentary from Lance along the way. He's got some actions for you to all consider and take away with you. And depending on timing and if anyone wants to ask questions, feel free to do so, and we'll try to address those at the end. If we don't get to your question, I do apologize in advance. However, myself or Lance or someone at CreditorWatch, depending on the question that is asked, if we don't get to you, we will get back to you within the next 24 hours as well, either by giving you a call or sending you an email. For some reason, PowerPoint is not liking my PowerPoint presentation today. I'm going to try to take a little bit slower and see how we go. I apologize for that. Appreciate your patience. Just bear with me, and I won't click through them so quickly. Try to keep them happy. Okay, a little bit about CreditorWatch. As most of you or all of you would know, we're Australia's leading commercial credit reporting bureau with over 50,000 customers. Products include credit reporting, monitoring and alerts, debt collection tools as the core product offering. We then have DebtorLogic Plus, which is a receivables analysis and trade program. A recent product that we introduced was Bankruptcy Plus, allowing you to see if directors of companies that you're dealing with, or sole traders, partners within those partnerships, are current or previous bankrupts. And Apply Easy is our online credit application and decisioning solution, something that can be used by businesses of all sizes, regardless of whether you've got a handful of customers or you've got tens of thousands of customers like some of our large organizations using us. So the Small Business Risk Review, quarterly analysis of aggregated data and trade payment information. We aim to provide a summary of key insights and trends that we're seeing, and in this case we've brought on an expert to provide a little bit of commentary around that as well. We're pulling information from a variety of sources, including ASIC, AFSA and the Australian Business Register, courts from around Australia, the Insolvency Notice Register, debt collection notices that are lodged by our debt collection customers, and also our 50,000 plus trade credit customers who use us. So a quick poll question here, just to get a sense of how the last financial year just gone by treated you. How did you find it? How would you rate it? Really simple, positive, neutral, or negative options there for you to answer. And I think while people are voting, Lance, I might just get your sense and how you felt about the last 12 months.
Sure. Thanks, Patrick. Yeah, I think, look, conditions are, with all-time low interest rates, relatively stable. I do feel that, I guess, as we transition, away from mining and more into the other industries, and we'll talk about that when we see the data, those sectors are still going through quite seismic changes. But, it's kind of steady as she goes. But, I do get the sense that, we still, there's still, and some of the data will show that there's still an underlying a trend in terms of where things are going from a credit perspective, and where businesses are facing challenges, whether that's staff or reporting or new entrants and technology. I think technology is fantastic. I'm a huge user of it, particularly cloud accounting technology. So that poses both an opportunity and a threat. And I guess ultimately, people that are able to leverage and scale technology and apply it will see lots of benefits in their business, as opposed to those that are kind of a bit more reactive. And I think we're going to see that play out over the coming months and years.
Yeah, great. Thanks for that. I agree with you. I particularly like the discussion around that technology. It certainly does pose plenty of challenges, to people who are doing something, or in industries that have typically been quite manual or person heavy, and they're being replaced with, machinery. But also it represents great opportunity as well for people to scale their businesses a lot bigger and faster too, and take on incumbents, something that obviously CreditorWatch has done, is a good example of that in the credit reporting industry. So having a look at the results here, a nice sort of mix of positive, neutral, and negative. I think that's probably fairly indicative of our customer base and the people who are with us today. We've probably got people who are in, manufacturing, and then you've got people who are moving into, finance and technology space, where they've probably seen it a little bit more positive than those in the older traditional sectors. So thank you for providing your results there and your insights there as well, Lance. So what I'm going to do now, I'm going to run through the normal sort of stats that we see, CreditorWatch, like we do in CreditorWatch itself, but in the Small Business Risk Review, we try to be as black and white as possible. We don't provide a huge amount of commentary or our own unique insights into why certain things are happening. And in this case, we'll do the same. And Lance has got some really nice data insights himself to discuss when we look at a comparative analysis across all the states, looking at the number of court actions as well as the value of those court actions. So in Queensland, we can see we've seen a big jump in the dollar amounts. However, there's also been a 9% increase in the number of cases. So that's 409 cases compared to 376 for this quarter versus the same quarter last year. As you can see, historically, Queensland has been fairly up and down for the last sort of 6 quarters there. There has been a number of, mining boom and bust as it's happening, and also the impact of natural disasters as well along the way. It's going to crash on me again. I'm really sorry about this, guys.
I'm a PC user, so I'm not even going to say it's your Mac, but
right, okay.
I'm
not. It's not the time for me to try to defend Macs either, as this is live. I think we've done 40 odd webinars, and this is the first time we've had issues with PowerPoint. So apologies again. Hopefully it gets its act together. New South Wales court actions, we can see a decrease across both the dollar amount and also the number of actions that are taking place, which is, to be honest, probably one of the more surprising things that I've noticed out of this, is 2 quarters now dropping volumes of court actions. But typically what we see is Q1 and Q2 being quite you usually see quite a number of court actions taking place. Now, it could be that last year was obviously a really big number that was taking place. However, the start of the year is we typically see more court actions than the rest of the year due to the fact that there's a slowdown in payments coming off the back of the Christmas period, and a lot of companies realize that they haven't done as well as they should have. Jumping into WA, we've seen again decreases here. That's off the back of some huge increases last financial year as well. So no real surprises there. It was always going to be tough to continue to climb like it had been. Victoria, not dissimilar to New South Wales. There has been a decrease in the number and a slight increase in the volume of court actions that are taking place. South Australia, very flat too. And then we can get into more of a comparative analysis. So I'll let Lance jump in here and provide his 2 cents.
Sure, thanks, Patrick. So I guess what we saw from that was Queensland clearly appears to be the only state showing a significant uptick in both the count and dollar value. Here we have a conditional formatted table which just highlights the significant swings, particularly around 2017 to 2018. And I guess, one of the biggest drops being WA, showing around 60% in both number and amounts. But like we look at, if we look at, we'll look at this slide and then the following slide, Q2 2017 was the complete opposite. So where you had most decreasing in the current quarter, that was actually completely the opposite in the same quarter last year. And whilst you had small increments in some of the other states, or even a lag factor, with Queensland, you're seeing it ticks up to 98% in Q3 of 17, and South Australia going up. Some of these increases are quite substantial in those 3 states compared to New South Wales and Victoria. And I think a lot of that relates to the mining, particularly those 3 states are very heavy into mining, and of course that also translates into to the amount. So obviously here we have the number of court actions. Patrick, if you want to go to the next slide, we can see by amount that those numbers are quite significant. I mean, you look at 180% in Q3 in Queensland, 255 in South Australia, and WA obviously had its big uptick. This is in 2017, that is. So basically we can see that big shift, whereas you compare New South Wales and Victoria, they just don't hit anywhere near the same sort of magnitude of of court actions, both in amount and obviously the amount. So, at the bottom, I created a little infographic which basically compares the two quarters, where you just see a sea of red in Q2 2017, and notwithstanding the fact that South Australia is that sort of lighter shade of green in Q2 2017, of course you can see in the chart above, Q3 of 17 it was 255. Which is of course significantly higher. So I think there are some lag factors that come into play, as you said as well, Patrick. So I think it's not, one can't look at things in isolation. You've really got to look at the trend, and I think, in Q2 2018 we're coming off the back of, I think, some of those very large court actions. So comparatively speaking, it is improving from that perspective, but we can't ignore the fact that there's still an increase in Queensland and a slight uptick in amount in terms of Victoria. So whilst there's we're coming off a very high number of court actions by a number and amounts, I guess we're still got to be aware of the overall trading conditions.
Yeah, certainly. Thanks for that. And I think what we'll see in the next couple of slides as well is that, talking about that lag, but also that knock-on effect as to entities then ultimately failing, be it, in this case, we've got the unincorporated entities, so they're trusts, sole traders, partnerships. We've seen a big jump there year on year. And typically what we see when we look at our data almost as what I call the journey to administration. And we've got an infographic. I've been talking about it so much that our marketing team finally went, geez, we've got to come up with an infographic for this so we can actually show people visually rather than Patrick banging on about it all the time. Is we see, defaults get registered by smaller organizations, then we see defaults being registered by larger organizations. That leads to court actions, winding up notifications, administration, and ultimately business and company failure in the face of cancellations or deregistrations of companies. So we're seeing that here in the number of cancelled unincorporated entities, comparing it to last year. Last year, if we look back at it, was an increase itself, and for it to go up again 60%, we're seeing a huge number of entities going under. The ATO is as aggressive as ever in terms of winding people up for overdue tax bills. There was discussion, for quite a long time for them to start registering tax defaults. That's unfortunately been put off for another 6 to 12 months. I think the earliest we're potentially looking at actually is July 2019, despite the fact that our CEO Colin is hustling, I should probably say, to get them to release that information to the market, because it is such valuable data for people to be able to see when a company owes a lot of money to the ATO. Looking at insolvencies itself, we've seen another jump in Q2 versus Q1 off the back of a couple of really big jumps last year as well. Corporate insolvency, so this is looking at proprietary limited entities, companies. This is always a really good indicator of what is happening out there. You find that the stats coming out of, I believe, ATO, ASIC, and also the Bureau of Statistics, looking at companies now, ultimately takes them more than 3 years to really establish themselves. Previously, if you went back 5-10 years ago, it was, most companies failing within 1 to 2 years. It's now pushed out to most companies failing within, 3 years, and you actually see a jump in the number of failures at that 2 to 3 year mark, which is something that's quite surprising. People obviously trying that little bit harder to make a company work, but ultimately not being as successful. However, when they do get over that 3 year mark, they tend to find they're able to battle on their own a little bit better and see themselves through to profitability. Looking at the bankruptcy data, again, I won't go into this too much as Lance is going to touch on it in the next slide. However, the big ones to take away from here is the fact that there's been so many bankruptcies again in Queensland, and also that there has been a year-on-year increase in the number of bankruptcies across Australia. Lance, I'll let you jump in here.
Yeah, thanks, Patrick. So, yeah, just to, I guess, repeat, bankruptcies, we're talking about individuals, where insolvencies refer to companies. And so, this data, I guess, like I said earlier, whilst, we're in all-time low interest rates environment, we still have to be aware of some of the other pressures that we have around individuals, and I think that's evidenced by this 7% increase across the entire nation across Australia. In particular, I think some of the high pressure points being Queensland, and WA, and obviously New South Wales. Whilst there's a slight decrease in Victoria and South Australia, we do have to look at the overall thematic around the pressure of new bankruptcies increasing, and what impact that has. And I guess, notwithstanding the fact that we have all those court actions we spoke about earlier coming down, I think the fact that this is showing that the bankruptcies are going up, indicates that it's not just about the mining. We've got to think about other parts of our economy in terms of the sorts of things that are really hitting homeowners and ability to people to who have got high debts and mortgages and things like that. And so I think the pressure is still on, and we know retail is struggling, and that's been for a number of years, and obviously people aren't spending. So I guess all of those indicates the pressure that people are feeling individually, and obviously this graphic shows that.
Yeah, and I think just to add to that, the world is certainly becoming smaller. So you talk about retail being under pressure. You've had the likes of Amazon coming in, and you've got larger businesses like your H&Ms and your Zaras. Yes, they've been here for a number of years, but they're putting so much pressure on those smaller retail businesses. But not talking about the world being smaller, Australia is also smaller. So whereby years gone by, if you were based in New South Wales, you probably did most of your trade with companies in New South Wales. That's certainly not the case anymore. Logistics has made it a lot cheaper to be able to move your goods and or services, nationally. So really being aware of what is happening in those other states is a lot more important nowadays than it used to be. You can no longer just rely on, okay, well, Victoria's in a pretty good state, so I don't need to worry about everything else, the rest of the states so much. Certainly we're all affected by companies, customers, suppliers in all the other states as well. So I think these sort of numbers are really good to be able to see. So I asked Lance to sort of come back to me with a few actions that he should be taking. Again, won't ruin it. So I'll let him take you through his sort of 4 points that he's put together for us today.
Thanks, Patrick. So I think hopefully the listeners can see that there is an environment out there that's still a little bit challenging, although it's somewhat neutral from the poll that we saw, and certainly in certain businesses it's quite neutral, and people might take the approach of steady as she goes. It's okay. It's not going to happen to me, and I think that's a dangerous position to take, because you just don't know. And I think awareness is the key. And quite often when people think of credit and CreditorWatch, they think about, it's my customers who pay me. And if I have a large customer and they always pay me, or they're very liquid, I don't have to worry about that. But it's more than that. It's actually all your key business relationships. Because and I wrote a blog recently on supplier risk, because supplier going insolvent could arguably have a much bigger impact on you in terms of being able to deliver your service or your goods, if they're not able to provide that to you, or your distribution partners. So you might have people that are helping you in the front line of your business distribute your products. What happens to them? The Amazons of the world that are coming. I think those sorts of things we've got to really consider. So it's important to understand the creditworthiness of all key business relationships, not just those that owe us money. Thinking about, if they don't pay me, that's a problem. It could be bigger than that. Understanding the impact of working capital is key. Don't worry, Patrick,
You've got your slides there.
But I've got my slides back up online. So yeah, understanding working capital is critical. And so working capital includes your debtors, your creditors, and your inventory or your stock. And so I think really understanding how these 3 fit together. That's why I talk about the the key business relationships, because they will be part of all aspects of your working capital. So it's not just about my debtors who owe me money, it's my creditors as well, my suppliers. And then of course it's my stock and stock levels in terms of distributing that stock. And so that's quite important to understand what impact that'll have, particularly if you have insight into your supplier being faced with some challenges, or distribution channel not moving as fast as you'd like it. What impact does a slowdown in stock turnover? What happens if you have to hold stock for longer? This is cash that's tied up, and I think people forget that profit is not cash. Everyone looks at profit and says, oh, I'm making all this profit, but where's my cash gone? And the cash is often tied up in stock, in inventory, or with your debtors. And also the cash could be tied up as in it's gone out the door because you're paying your creditors too soon. So actually understanding the intricacies and the relationship between cash and profit, which is via the working capital, is critical. And I think to better understand each of those key business relationships and what impact they might have on your cash flow is important. So I think the last point is speak to your trusted financial advisor or your financial mentor. Typically they're an accountant or a CFO. Ultimately this is about really understanding the hypothetical. So rather than sitting saying it'll never happen to me, what if? Well, what if it did happen? What impact could your business sustain? How long could your business sustain an increase in inventory days? So let's say you couldn't move stock as quickly as you wanted to. You might be selling it, but you just can't move it out. It gets backed up. What impact will that have on your cash? And can you still pay your employees? What happens if your creditors come to you and say, look, we're under a bit of pressure and we need you to pay us earlier so we can continue to supply you with stock? And so you need to assess, well, what impact does that have on me, and can I afford that, and does that mean I need to renegotiate my cost of what I'll purchase the stock at, and if I can do that, what's that break even point? So I think having that at your fingertips, to being able to understand that's I guess part of what SQL does as a financial mentor to SME businesses, really getting them the tools to be able to model these scenarios and really understand, if I renegotiate with a supplier, what impact is that going to happen, or what impact is that going to have, not just on my profit, but on my cash, because cash is king. Everything else is really just vanity metrics. And I think, that's really important. So I think in the end, you need to understand with the data from a supplier like CreditorWatch, understand those key business relationships and run what if scenarios in your business to say, well, if that happened today, what would that look like? And start putting action plans in place now. Or you might actually have an issue now you don't even know about, particularly around suppliers or around key distribution partners. I think everyone focuses again on the debtors and people that owe me money because it's so closely connected to cash and I need to get paid. So people think about that in the context of debtors that owe, but what about creditors? And I think that's sort of a something that's below the waterline that people should absolutely be aware of. So bottom line, be aware and don't wait for the bad news to hit.
Yeah, great advice there. And I think that the important thing is it is quite basic, remembering that cash is much more important than profit, which is much more important than just looking at the revenue line. Keeping an eye on all of those relationships. Now CreditorWatch is obviously positioned as a credit reporting bureau, typically saying, hey, monitor your customers, but it is set up to be able to monitor any entity out there. If they've got an ABN or an ACN, you can be loading up and monitoring your customers, suppliers, and any other partners that you think you should be. Similarly, you can be running credit reports on them. Something we do internally as well, we call it the 1%. If you can improve your debtors ledger by 1%, your accounts payable by 1%, and your revenue by 1%, what does that ultimately do from a profit and a cash flow point of view? Just little steps to get there. It makes and ultimately a huge difference. And mapping those out is obviously something that if you can't do it internally, people like Lance can obviously do that for you to show you the benefits of being able to do that. I've just wanted to get to our last slide, just around some discussion points, and I thought I'd just ask Lance a couple of questions, off the back of this information that we've just displayed today, but also, given the people who are listening in today, a nice mixture of small business owners through to credit managers, finance managers of large organisations. So the first one I've got: what might some possible reasons be for the significant swings in court actions in the current quarter when compared to the other quarters?
Thanks, Patrick. That's great. So I think there's clearly a number of different factors depending on which industry that you're in and the trading environment that you're sitting in. But I think given Australia by and large is a resource country, and we're moving away from that, or certainly our reliance of that as a result of the the mining boom somewhat coming to an end. I think that's probably one of the primary drivers, but there's others. We can see an uptick in bankruptcies, which obviously translate to individuals, but those might be individuals within those businesses, particularly in the small end of town. Business owners and individuals would mortgage their house and pay their debts through their own credit cards and do a whole range of things in their personal name as well. So I think there's clearly other aspects of that. There's a reason why interest rates are all-time lows, because really the government sees the sort of pressure that's across the board, and I guess if there's particular industries like retail, as we said before, that new entrants into the market like Amazon, all of these aspects are being disintermediated through technology and a whole range of other new players in the market. So I think it's not only just the mining boom. I think there's certainly a trend around that, and you can see that happening now and playing out, and the rate of change in technology is just so frighteningly fast. And I think businesses that have been around for many years, you look at, I think I saw an infographic not too long ago, the Fortune 500 companies that existed 15, 20 years ago don't exist anymore. Your Google, which is Alphabet, just wasn't around. Your Facebooks of the world, these companies didn't exist. They weren't even on the map. Yet now they're part of the largest companies in the world. So, those sorts of shifts in businesses and industries is global. But I think we can see that playing out in Australia, and particularly as we move, and we're a very high cost labor country. So I guess as other business models come in that have cheaper labor and offshore, those sorts of things are certainly part of that ongoing pressure around sustaining an Australian business that's I guess has been built over many years in traditional processes and structures. Obviously that's going to put pressure on them as new people come in with skinnier margins and are more profitable.
Yeah, I guess taking a small business look at it, as the CFO and a financial mentor, how is this information relevant to them? We typically find that small business owners are, they might be experts in marketing or sales or in their product or putting the product together. But generally, the one thing that a small business owner doesn't have, and I'm saying generally here. So if there's anyone out here who is a sort of risk manager who's gone into small business, or a finance manager of that ilk that have gone into it, I'm not looking to offend, but typically we find that credit and debt collection and credit management is certainly not not their forte. So how is this information that we're showing today relevant to them? And we've got the action points, but I'm interested to hear your thoughts on that.
Yeah, thanks, Patrick. I think you hit the nail on the head. I think small business owners are experts in their particular field, and the accountant or bookkeeper that helps them are experts in their field, and that helps them with tax and compliance and kind of getting the numbers right in terms of what's happened. There's not business owners don't have a lot of, unfortunately, either from a skill set perspective or just don't have the data in terms of insight. And so, helping business owners be aware of that risk in their business is something which this data will hopefully help with that. Certainly, whilst it's very general, it's certainly focused in the small business space. So, getting understanding the data in terms of insight, but then also have some foresight. So I think, you've got to look forward. You've got to, there's no point in saying, well, hang on, this is all fine, but that's happened and that'll never happen to me. But that's very backward looking. And, just because it's never happened in the past doesn't mean it won't happen in the future. And so I think when you start looking forward, these are skills that accountants, bookkeepers, and business owners just don't have, because they're not used to preparing forecasts and budgets and models around future trends. It's certainly an area which we specialize in, and something which I've started a business out of, because I think that demand for that skill, whilst historically has sat in the big end of town. So large corporates have very large finance teams, and they do this on a regular basis, whether it's quarterly or annual budgets. But the small business owner can't afford a CFO. They can't afford the sort of skills that are required to do this. And small business owners also don't have the time. And to be frank, it's probably not their core focus anyway. They need to be focused on the business. They can't really get worried and bogged down with all the technical stuff. So they really need someone to kind of help them along that. But I think as a first point, they need to be aware. And so I think hopefully having this data and having CreditorWatch as a service provider in terms of that insight on their key relationships is critical. So I think having the insights is one thing, but then taking the actions beyond that, then obviously there's more help that's needed from SQL CFO and others as a financial mentor.
Yeah. One last one. Court actions are, as we've seen, they can go up in one state, down in the other, and it changes quarter to quarter, year to year. What are the sort of warning signs that people should be taking from that, or warning signs leading up to those sort of court actions?
Yeah, I think certainly look at the particular segments, and I guess if you're starting to feel that there's a bit of pressure in your own business. Some of these court actions are early warning signs of certain stresses in certain areas, and I guess we can see that from the data that we've seen. But more importantly, I think taking action and the warning signs that court actions indicate show that people are if there's deregistrations, obviously when things start going to court, it's almost too late. And so I think the fact that there is been, although we've come off a very high base, it's still going up.
And they need to be reacting with speed, right?
Yeah, absolutely. So I think don't take a sort of a relaxed approach. I think there is a need to kind of think about these sort of trends and what impact that might have on their business. And it's, again, not from just the customer angle, it's from across the entire business around your key strategic partners and business relationships.
Yep, fantastic. We've probably run our course there. I'll pop up a poll question just to finish off, just to find out, did you find today's webinar insightful? But as always, I just wanted to say thank you to everyone who attended today. I'm not going to jump in and have a look at any questions have been run, because I know that typically we get to that 40-minute mark and people start to leave. However, we will address those individually. I think we've got through a huge amount today. A big thank you to Lance Rubin from SQL CFO, my apologies, for your commentary and the time that you've put into this. Lance and I have been going backwards and forwards quite a bit to make sure we've got, we've pulled out the right stats and we've got some decent insights around that. So Lance, thank you very much for that, and definitely look forward to having you on board in the future. Before you guys all sign off, as always, please let us know from a feedback point of view what you thought of today's webinar. Good, irrelevant, bad, hopefully not too many bads, but it does help us continue to improve the webinars in the future. And for those of you who are customers of CreditorWatch, we'll be running a customer survey in the sort of coming month or two. We're just putting that together at the moment around, how you use CreditorWatch. Are you enjoying it? Where can we make improvements? Are there products out there that we should be integrating with? Are there new products or features we should be building? We always like to have that constant feedback loop from our customers. You guys ultimately help build the product and make it what it is today. So one final thank you, Lance. Again, thank you very much for joining us today.
Pleasure, Patrick, and I hope there was some value for the listeners that joined.
Certainly. All right, thank you, everyone. I'll sign off now, and I appreciate the time in joining us and also contributing to the polls. Have a great day.